Hey, it's Ryan from the Dividend Investors Club, and this is the Market Trend Tracker, where we track the trends that will help make you a better dividend investor. And today we're going to talk about, is the market getting defanged, right? Yesterday we had a huge sell-off in technology, and FANG is an acronym that everyone uses for the big, large cap tech stocks, Facebook, Amazon, Netflix, and Google. And it's really what's been driving the market higher. I mean, even last year when we had the huge run, as we bottomed out this year after the sell-off, it's really been those big FANG stocks that have been driving the market, both higher and lower. So it's definitely a trend we want to continue to monitor. We're going to take a look at that today, among some other things. But let's start off with just the charts over here on the left-hand side. We want to make sure that we understand what's going on with the general market. And so, this is one thing, one theme that we've kind of been talking about, just over the course of kind of the last, few weeks here, or month or so after we had the sell-off. I think we've kind of put in a bottom and a top in my mind. We may test this lows, and, obviously we're below the 50-day moving average again. We're about 1% below the 50-day moving average, but you can kind of see we've kind of just been bouncing around here, along the 50-day moving average, which is still trending up. The 50-day is still above the 200-day, so that long-term trend is certainly still intact. But what we want to know for the short term is kind of where are the big support and resistance levels, and I think what we've kind of seen, just recently, is that I think the support is going to be this intraday low. So we may test the lows. We'll see. It may not get back down there, but I don't think we're going to go much below that. But that's certainly still in play on the low end. And then on the high end, I don't think we're going to go rush and make new highs again. And so we're really going to be bouncing around, in this range here. And so as we get kind of lower towards the end, the bottom of the range, that's when we need to really start looking at the sector allocations and those kind of rotation type decisions that we have to make to figure out where the value is and where we need to be investing, and vice versa when the market kind of gets up towards this high end. It's kind of what's been driving the market higher, and are those sectors at risk of rotating into maybe some of those sectors that have been underperforming. I think that's what we're seeing right now with tech, and we'll get to that in a minute. But I think we're still very much in that range, from a general market perspective. And so don't be too freaked out when we see these pullbacks, because we're going to have those. We just need to know that it's the normal kind of move in the normal range for the market, right now. Excuse me. And so, this next chart here, interest rates have been a big kind of mover of the market, if you will. I think a lot of people thought that, that was one of the big reasons for the big sell-off we had, about a month ago. And we've obviously come back, very nicely from that low, but we peaked, this range here, with the 10-year Treasury yield and the S&P 500 dividend yield, went over 1%. And interest rates are still very much in play, but you can kind of see, I think, as this was rising, people didn't really know, where's it going to stop? And I think, right now what we've seen is some stabilization, right? We've stabilized under 3%. I think what that's kind of factoring in is that, maybe we're going to get 3 to 4 interest rate hikes, and we do have our first hike for Powell probably coming this week. And so again, interest rates need to be on your radar. But I think what the interesting thing and the big point here to make is that I think we're stabilizing here below 3%, which I think is certainly positive for the market over the short term. And then from a volatility perspective, we're back down in a normal range. We went kind of as low as like 14 or 15 a few days ago, from a peak of 50, and so we're back down into a normal range for volatility, which is good. But what you want to do is keep your eye on it when it gets kind of in this 20 range, and we closed yesterday around 19, so I expect it to probably bounce around above and below 20. But from an option perspective, if you follow our triple income or any of our option strategies, that's obviously a good thing when option prices increase like that. And so as a seller of options, it gives us good premium. So volatility is good from that perspective. But again, all of this stuff kind of looks normal from a general market perspective. So now it's kind of getting into the weeds of what's been moving this market. And we can see that in these heat maps that I have here, excuse me, to the right. So if we're going to take a look at technology, you can kind of see what I'm talking about here. I mean, it's been the driver of the market, if you will. Just looking up here at the in this top heat map of with technology, you can see it's absolutely been the driver year to date. 1 month, 3 months, 6 month, 12 month, it's been, the best performer. If you look down here, with the NASDAQ as well, you're seeing a ton of green, from that perspective. So, going into yesterday, the NASDAQ was up almost 10% year to date. And that, was comparable to, the Dow was up less than 1%. Dividend stocks were down, for the year, going into yesterday. And so it's really been this tech, driven rally, if you will, and it's really been driven by those large cap growth names. And so, the other thing to kind of look at here, and the thing that we've been following, and certainly as value investors, that's kind of why we've seen some kind of underperformance in not only the dividend stocks, but the value dividend stocks, is because there's been a huge divergence with growth and value year to date. I mean, you can kind of see right here we're at 5.5 or 5.3% on growth, and value is down 2%. And again, that just shows that it's the large cap growth tech stocks that have really been driving everything forward recently. And so going into yesterday, large cap growth was actually up. I think it was up 7%. Because we had a big sell off yesterday. And so those are the if you're thinking about kind of reversion to the mean, and when things get ahead of themselves, I think what's been happening with tech is that I think it's just gotten ahead of itself. And so when you saw all this news about Facebook yesterday, we got some negative news on Apple as well, and so the two of the biggest kind of FANG stocks had negative news. And I think what you're seeing is that it's just the market reacting, saying, hey, these stocks have run up. Maybe it's time for a little bit of a pullback, and the catalyst was, these negative, kind of headlines in the news with both of those stocks. And so that tends to happen when you see some of these, sectors or asset classes get out of whack and, just go too far too fast. And so that's what I think you're seeing. I don't think we're going to have, a major, huge correction in, technology or the FANG names, but, they did get a little ahead of themselves. But I think now you need to, you need to make sure you're keeping your eye on those. And I think they do have a place, in a dividend portfolio. Certainly, a lot of those names will be starting to pay dividends in the future. And, Apple already does, but those are huge cash generating companies. And, they can't really be ignored, from a long-term kind of portfolio perspective. And so, if you're looking for things, for areas to put money to work, though, you can kind of see we had some very positive, I think, kind of rotations happening, just over the last week. And I'll show you right here. Two of the worst performing sectors year to date have been real estate and utilities, and so consumer staples as well. But they continue to struggle last week. But you can see right here, real estate is in the green, and utilities is in the green. Last week, and so we did have a little bit of rotation. Maybe defensive, in nature. Over the past week, as tech's kind of sold off a little bit. And so that's been kind of that's been the rotation. It's people are rotating out of tech. All right, where's tech at here? So tech's down. Just over the last week here, tech's down 3.5%. Utilities are up 0.7. It's really one of the only ones that are up over the past week. And then real estate's flat, but you can kind of see, the ones in the green are the ones that are outperforming. And so it's been those kind of defensive, high yielding names that have really gotten pummeled, with the interest rate fears, and those are now the ones that people are rotating in as they're rotating out of technology. And so that's just the main kind of theme. Is the market getting defanged? I don't really think this is going to be kind of a longer term thing, but I think it was just to keep perspective. These numbers don't lie. It's tech has been the leader. It's gotten ahead of itself. The Nasdaq's been the leader. It's gotten ahead of itself. It's been the best performing stocks. Just recently in this rally, as well as over the last year as well. So I think it just needed a little bit of a sell off. It needed to come back down. We need to rotate into some other names, and that's just what's happening now. And so keep your radar on some of these stocks, and this is a good time to kind of scroll down to the second page here. This is kind of our stoplight thing. It's it keeps track of the trends within the sectors. I mean, you can kind of see we're all red and yellow now. Whereas if you prior to the big sell-off, a month ago, most of these sectors were green, which means they're in strong uptrends, and you can kind of see, really the only trend left in the green right here is technology. And so, we are getting pretty close to the 50-day, and I think that's where that tech sell-off probably is going to end, if you will. We may go through the 50-day a little bit, but I expect this trend in technology to kind of stay strong, kind of continue to lead the market. But there's good stocks available in all of these sectors, and I think a couple of other positive things, and I just kind of pointed this out with real estate and utilities. You can see that we've actually bounced off the lows in those sectors. So that, I think that's a very positive sign for those two sectors. You can kind of see we've bounced off the low and kind of stabilized and are making a move higher here. And I think that's a very positive thing for these two sectors that you can kind of just see here have we're pretty much in a free fall as interest rates were rising and there was all that fear there. So I think that's a positive thing. But these are all the trends to follow, and this just gives you perspective. There's so much noise in the market, but I think if you follow like the big major trends like this and the sector rotations, it helps you stay confident in your strategy. It helps you, just right now with, for example, with, value stocks underperforming, when you scratch your head and say, why are they underperforming? Well, it's pretty clear, right? It's pretty clear when you just look at the numbers and say, well, okay, it makes sense, right? The growth names have been leading, and that's just what's been leading the market. But there's always a rotation that happens between growth and value, we're going to get a shift back to value at some point, and so certainly don't lose those stocks on your radar. But we always suggest being diversified across sectors. We encourage you to be diversified, in growth and value names. And so, this is again, just kind of high level perspective that, keeps you focused on your plan, and keeps you confident in your investing. So that's all I have for this week. I wouldn't be too worried about a huge, defanging, of the market. But certainly it had gotten ahead of itself, and, there still could probably be some selling off in tech, but, look for those tech names, certainly on the dividend side, that make sense during the sell-off, and keep your eye on some of the utility and real estate names that have certainly sold off as well. So that's all I have for this week. Take care, everyone. Have a great week.
I think we all know that the stock market can be a scary place, especially if you're trying to go at it alone, but you don't have to do it. You don't have to be there alone. At the Dividend Investors Club, it's a community of investors. We're working together to grow and preserve our wealth. So if you like this video, please check us out at dividendinvestorsclub.com. Consider joining the club and joining us, and definitely subscribe to our YouTube channel by clicking the subscribe button below this video. Take care.